webinar, right, we are going to talk about the fundamental analysis with PU Prime. So as you know, there are a lot of different kind of trading strategies. We do have analysis technical, we do have fundamental analysis. So what is the best analysis for all the trader to do the trades? From my opinion, I think both of them you need to combine together, because from a fundamental analysis front, right, you need to understand what's going on into the market. Like the currency suddenly go up or go down, except for you just explaining because of the chart movement. It's very important for the trader to understand what's going on, what caused the currency to go up, what caused the currency to go down, and then like economics data such as the CPI thing, the US interest rates thing. It is very important fundamental analysis for the forex trader in the world. So today I will teach you how can we analyze the forex products, the gold commodities products, by using the fundamental analysis. So this is the thing that we are going to talk later. So it's mostly like a storyline that can convince you or to advise you whether the market trend is very good or bad in future. So this is the highlight that we are going to discuss. Today we will talk about the economic data, like identify what economics data are the most important for trader. We will talk about the non-farm payroll data later, the CPI data later, to analyze which data, if the data higher or lower, what will be the impact towards the currency. Then we will trying to talk about what is the relationship between the employment, inflation, and GDP. And then we will talk about the monetary policy, which is linked to the interest rates hike, like whether the central bank is going to increase the interest rates or lower the interest rate. And most importantly, how does the interest rate is going to affect the exchange rate. So this is also another key thing that we are going to mention. So to simplify it, I think today, right, we are going to talk about a lot. After today's webinar, right, you guys can actually like able to understand more news, especially news from Bloomberg, news from Reuters. You're able to digest it easily. So I hope today's webinar can help you to form a good strategy. Like you can learn a lot of things from today's webinar. So the first thing is regarding economics data. So the first question is, why does the economics data are very, very important towards everyone? So I give you one of the example. If you are one of the traders in the world, there are tons of countries in the world. So you are going to pick the best countries, right? So how can the currency going up? How can the currency going to appreciate more? Of course, because of a lot of people going to invest in that country, then of course the demand for the currency will go up. And this is the reason why the currency is going to appreciate in future. But how can we know which country is the most attractive country for the investor to invest on? We don't know, right? So you cannot just saying that US is the best economy, China is not, is another best economy. Then maybe other countries such as Australia is not that good. You cannot just mention like that. You need some proof. So as a forex investor, we need to look towards those kind of proof. We need to try to understand which country currently their economy are very, very good in performance, which country is good, which country is bad, and whether we are going to forecast the currency go up or go down. Okay, so how can we understand which country is good or bad? The first thing, which is quite simple, is by understanding their economics data. So you can go and search a lot of economics data in the world, and then maybe the first thing, maybe you can just move towards one of the famous showing economics data website, which is the investing.com. You can actually notice that you can filter all. Like I teach you guys how to filter, and then you can just filter the 3-star, 3 importance data, and then you click apply. So once you click it, there will be a tons of economics data. They will be coming up. So you can try to choose the country that you are interested to focus on. So some trader will ask me, where do you guys think today we will have a very high impact data? Actually, yes. The most important impacts data for today is CPI, which will be released 25 minutes later. Later during our webinar, we will trying to stop and trying to analyze the data. So this is one of the important data. So later I'll talk about how the CPI data, as a fundamental analysis, how can the CPI data affect the dollar movement, affect the gold movement. So this is the thing that we are going to talk also later. So the key thing that why we need to know the economics data is because we need to choose the best country to invest. Because when the economic data showing some positive result, means the country is performing well, When the country is performing well, we can expect the currency is going up. But so much of economics data, how can we ensure what economic data is good is very important. So I actually trying to simplify for everyone. I try to like put up or summarize out what is the most important data, like for all the traders to focus on, like even not the trader, like from central bank to focus on. Okay, so the first data is we are going to talk about is employment data, which is the jobs data. And then we'll talk about the inflation data, and then we'll also talk about the GDP data. So these three data is the most can consider as the most important data for everyone to focus on. So in future, right, you are going to look. You are not sure which data are very important. Maybe you can just look at these three data: employment, inflation, and GDP. It might save you a lot of time. Okay, so three most important data. So first data is regarding the employment. We do have a lot of different kind of employment data in the world. So why does the employment data very good for currency? Why if the employment data showing some positive reading, the currency is going up? Like if you are going to look at the previous non-farm payroll data, you can notice that why after the US non-farm payroll data released, right, negative data, and then why does the dollar drop? Because employment data are very, very important for the economy of that country, right? So if the country, the employment data in that country, like for example, right, employment data in the United States, the non-farm payroll, a very, very important data for new traders to focus on, or for all the traders to focus on, a very, very important data, non-farm payroll. After the non-farm payroll data release, right, you can notice that negative reading and dollar drop aggressively, and this is the time when gold slowly moving up. So this one of the proof to you guys, like saying that economics data are very important. So why jobs data are very important? We need to look at their correlations. So when the jobs data provides some very good reading, right, it means that a lot of people getting job. Okay, a lot of people getting job, and then when a lot of people getting job, right, you get the salary, right? When you got the salary, you are going to spend it. So once you spend it, the economy will slowly become much better and better. So business will start to expand. Good expansion in business will actually attract a lot of investors to invest in that country and cause their currency to slowly moving up. So I put it simple. When employment data is good, country become richer, more people spending, more business expansions, it will attract investors to invest in the country. Of course, because if you are going to choose the best country, right, you are not going to choose those countries that a lot of people don't have job, because when a lot of people don't have job in that country, it will be very risky. Okay, so this is a thing that you can focus on. Good economics data in jobs means that good economy will actually attract a lot of investors. So how can we filter out like tons of data? How can we filter out whether the jobs data or what? You can actually click, this is investing.com. You can actually just click the employment data over here. Then after that, you click apply. So all the crucial economics data for employment related thing, it will start to show up. So every time you notice the employment data, right? Like if you're not sure what is the data, I'm not going to deep through and talk all of the data. So I'm just guiding you what is the procedure for us to understand the data. Like if you're not sure what is the non-farm payroll, you can just click inside, and then it will trying to show up what is the definition of the non-farm payroll. Or even sometimes, right, our Pure Prime Instagram or even the Facebook page is actually by posting some data that are very important next week, then you can try to digest from it. Okay, so this is a definition of the data, so you can refer to it. So for example, if NFP are very good, dollar might go up because good economy. If this data NFP are doing bad, then the currency might be dropping. So put it more simple, most important, one of the important data should be the employment data. So this is a thing that we need to focus more on. So after you understand the job data, very simple, then we are going to focus on another data, which is the gross domestic product. Okay, so gross domestic product is something like quite like very complicated, right? Very professional terms, very complicated, but I will try to use a very simple term. So what is the gross domestic product? To understand it better, gross domestic product is something like the revenue or the income of the whole country. So when you notice the GDP data, sometimes if the GDP data provides some very, very good reading, right, this is the time that might cause the currency go up, because if GDP good means the currency are very, very rich. Sorry, the countries are very rich. You will actually attract investors to invest in that country. So GDP, very, very good, important also. So if you are not sure which country are richer to each other, then the first data you need to focus should be the GDP. But I don't advise you to look the GDP around the world. You can try to just focus on developed country such as GDP in UK, GDP in US, Euro, Japan, Australia, New Zealand. You can try to analyze like major countries. So to identify which country have the best GDP performance, and then you can slowly to decide whether you want to long the currency or not. Okay, so you can combine with fundamental and technical all together. For example, if you know currently, for example, you know the UK GDP are very good. UK economy are performing well, right? So what are you going to do? You might be considered to long, but it will be much better for you to combine with technical analysis. Like for example, even though you know overall UK economy are very, very good, but you need to combine with analysis technical, right? So better you need to understand your entry price by using the technical analysis. So you can try to combine together. Fundamental can be used in mostly maybe long-term trend, but you can combine with analysis technical to understand what is the good entry price for you to do. Okay, so this is the combination. So I think you guys have a brief understanding about what is the gross domestic product already, what is the GDP already. So to put it very simple way, it's just profits of the country. The higher, the better. Okay, my sound is low. Can you guys hear me? For others, if you guys have any questions regarding the voice or things, you please let me know. Yeah. Okay, so I think I can continue. So this is an explanation. When GDP is very good, means the country is good. So the country economic performance are very good. That's why the consumer spending going up, more inflation, business profit going up. And then the most important thing you can just link high GDP, better economic activity, which will be attract investors to invest in that country. So this is a key point. Okay, so GDP data, I think you guys clearly understand. So you guys already understand two most important data already. So employment data, I think you can you go search the employment data, right? It doesn't mean it will show employment like that. No. Like for example, US employment data is non-farm payroll, and some employment data should be like initial jobless claim, unemployment rate. So this is the thing that you need to bear in mind. So to put it simple, you can just filter it so you don't have to memorize all the words. You can just filter it just click employment. You can notice that click employment and you click apply. And everything will start to show up. Simple your life. But if not, tons of data that you need to analyze that you are very difficult. Okay, so gross domestic should be simple because gross domestic is just write out like GDP. That's it. There are no special name for GDP. GDP is just GDP. Compared to employment, we do have non-farm payroll, initial jobless claim, unemployment rate, things like that. But GDP is just GDP. So very simple. So GDP linked to the country's profit. And then we're going to move on to the another things, which is the inflation. Inflation is also considered as the most famous things in the markets right now. It's the most important thing that happens in the market right now. So you can read all the news saying that inflation are too high, the Federal Reserve is going to increase the interest rates, or inflation are very low, and then the central bank is not going to increase the interest rate. And then you can notice that inflation in Japan are very, very low. That's why the BOJ, the Bank of Japan, is not going to increase the rate. So this is the reason why Japanese yen dropped and then USD JPY increased aggressively previously. So inflation is one of the most impactful news as for now, especially after COVID, because during COVID time, bank keep printing money, causing out a lot of price out of controlling, because bank keep printing money supply in the whole world are very high, and then a lot of people trying to increase the price. So for those who don't understand inflation, right, I just put in a very simple thing. You can notice that in 1980, with this kind of dollar, you're able to purchase that much of products. Okay, but in 2018, with this kind of dollar, you can only purchase a small products. Means that the price of goods sold become more expensive and more expensive. When things become out of control, it will be very difficult for people like us to suffer. Okay, So inflation, you need to understand. Later, yes, later we'll have a very important inflation data, which is what we call the CPI, that we are going to analyze later and trying to understand whether the movement should be huge or small, like after 15 minutes. But because we do have some new trader over here, so we need to let them understand what's going on now, why the inflation data are very important. So maybe later we'll have some proof, but I cannot guarantee they must have a huge volatility. I cannot 100% guarantee, right? Maybe 70 to 80%. There will be a huge movement after 14 minutes. Like stay in tune later. Later we directly look at the goal after the data release. Okay, so for new trader, right, the data that we are going to release later is in one of the very important inflation data, which is what we call the consumer price index data, inflation data. So focus on it. So now you already have a brief understanding about what is the inflation right now, right? So how does the inflation is going to affect the currency movement? If the inflation high or inflation low, whether the currency is going up or going down, and then how does the US inflation affect the movement of gold? I think a lot of investors are quite interested to this kind of news, right? Like even though some new trader after the data release, the CPI data release, everyone talk about it, but as a new trader, you might feel confused. You don't know what is that. Like why all everyone focus on the CPI data? So why is it very important for everyone? Okay. So later after the webinar tonight, I hope you guys have a clear understanding. So when you look at the news, you look from your friend talk about the CPI data, you will be able to understand it. So CPI data is inflation. This is the thing that you understand. But how the inflations affect the currency? Okay. So this is also another very important thing that we are going to talk later. I think we still have time now, like 30 minutes. I think should be enough before the data release. Okay, so I'm trying to link the CPI, the inflation data towards the currency now. So stay tuned. Okay, so why normally, right, when the CPI data release, the inflation data release in the United States, and then the currency will going up. Why does this thing happen? Because we need to move back towards the central bank monetary policy. So before we link inflation's monetary policy, interest rate, and then we need to understand what is this actually. Why does investors need to understand all of these things? Because inflation linked to interest rate. Interest rate is actually linked to the exchange rate movement. Okay, so you guys already know when inflation is too high, right, it's actually bad for the economy. So as a central bank perspective, right, they need to try their best to control the inflation. Okay, so what are they going to do when price become more expensive and more expensive? As a central bank, what are you going to do? What are you going to do is actually increase the interest rates. So you need to stay in tune. Like when central bank decide to increase the interest rate, you need to know, maybe the currency might be slowly going up. So why when interest rate increase, currency will go up? This should be the main questions now. So we know high inflation will link to interest rate increase, but why high interest rates will prompt the currency like exchange rate to going up? Okay, so I explain it first before I explain why they want to increase the interest rate. So you just remember inflation high means the central bank might increase the interest rate. So you link the interest rate to the exchange rate. Okay, later we'll talk of, because I think in 10 minutes there will be a data release already. So I don't have time to explain all as for now. And maybe after the data release, I'll explain why they want to increase the interest rate. So as for now, you just know high inflation means high interest rates. High interest rates means currency is going to might be appreciate. So to put it more simple, high inflation data, currency might start to appreciate. So high inflation, currency will go up. Yeah, so this is the thing that you need to understand. So why interest rate and exchange rate, there are relations. Why? I give you one of the example. If you guys have been trying to deposit in bank before, like you want to save money in bank, and then bank is going to pay you some money, right? If I'm going to set $1,000, if my deposit rate is 4%, then I might receive $40 from bank. Okay, so you can understand interest rates equals to the deposit rates. The bank, like you save money in that bank, and then the bank pay you. So no risk, right? Bank is not going to default, right? So when you save 1,000 in bank, I don't think bank will run away. But the bank is going to pay you to benefit you because you save in that bank. So I think all of you have been this kind of experience before. So this is what we call the deposit rate. So when they decide to save in the bank, and then bank offer the deposit rate, this is what we call the interest rate. So for example, US bank is like 4%. If you save 1,000 in the US bank, then US bank going to pay you $40. And then when you compare to others bank, just for example, you compare to maybe Singapore bank, for example, just for example, because Singapore bank can consider have a quite high interest rate. So if you save in a Singapore bank, they are going to pay you 10% interest. Like if you save 1,000, you get $100. So which bank you are going to choose, Singapore or US? Of course, a lot of investors are going to try to save in the Singapore bank in order to get the 10% of interest compared to US 4% interest, the deposit rate. So put it more simple, high interest rate is actually will attract investors to save in their country. Okay, like for example, if US have a 10 to 20% interest rates, if you save in US bank, you can just gain 10 to 20% free, like risk-free return. So of course, it will be able to attract a lot of investors to invest in that country, save money in that country. Okay, so you guys have quite familiar already. So interest rate linked to investment, attract investment, investment linked to currency appreciation. For example, if compared to US and Singapore, Singapore offer you 10% return, US offer you 4% return, you will choose Singapore, right, to save your money, right? So if you are going to choose Singapore, then of course, a lot of investors are trying to change their money to Sing dollar and then put in that bank. So this is the time that cause the currency to increase. Okay, so you get it, the relation. High inflation will cause the central bank to increase the interest rate. So when the central bank increase the interest rate, it will actually attract more investors to save in their bank. So this is the time that cause the currency to slowly moving up. Okay, so later data like CPI data is going to release like around 7 minutes. So this is what we call the inflation data. So if the CPI data higher than the market expectations, as I mentioned, means that this is high inflation rate. So high inflation rate might be causing the Federal Reserve decide to increase the interest rate, and it might cause the US dollar to increase, and then gold might starting to going down. So I think you guys have a brief understanding already, right? About what is the relationship between the exchange rate, inflation, and then the interest rate. So I repeat, when CPI data high means US are suffering from high inflation, and then the Federal Reserve might suddenly come out and saying that they are going to increase the interest rates, and when that time comes, then there will be a chance for dollar to rebound. But it should be very impossible for us to forecast whether CPI is good, whether CPI is bad. It's very difficult. Even economists or even a Federal Reserve member also unable to forecast it. So some people might ask me, is it good to trade before or after the news? Is it good to trade the news? I would like, I will discourage you guys to do this kind of thing because it just 50-50% is what I can say. Okay, it's just 50-50%. So the risk should be very high. But if you like risk, you like the feeling, right? You like to trade like maybe 100 pips per minute or 5 minutes, then you might experience it. But for new trader, I highly don't recommend you to trade during or after the CPI data. You can try to analyze after the CPI data release, and then what can we do from it? This should be the best. Okay, so you better don't like just full margin to trade, especially during the CPI. It can just increase 100 p and then suddenly drop back. Even the data, like even the CPI data may be good or worse than expectation. Sometimes the market trend are different one. So yeah, it's very difficult. And then you say trade using fundamental are so difficult. Yes, that's why sometimes you need to combine. So for new trader, maybe you can just get a brief understanding after the data release, what happens in the market, and then trying to focus more in future. It's very, very good. So really need to watch out 5 minutes, and then before the data release, maybe you can analyze a bit about the gold trend first. So to decide whether it might be going up or going down. Risk disclaimer. So for today's market webinar is only intended for educational purpose only, and informational purpose only. So participants shall not take it as financial or investment advice or trading signal. So before we need to say some risk disclaimer before we give some charts analysis. So you can notice we still have 5 minutes, don't worry, I still have enough time. Okay, so you can notice that currently gold trend is trading very, very slow, and currently it's still testing on a very, very crucial resistance level at around 1940. You can notice that 1940 very strong. It tests a lot of time before already, like more than 5 times around this region. It's quite obvious these are very strong resistance level already, 1940. So if the data released and if the data going to show some very negative reading, it's very negative compared to the market expectations, then there will be a chance for gold price to go up. Why? Because when inflation data negative, dollar will drop. So when dollar drop and break again the lowest level around here, there will be a chance for gold to continue go up. So you guys know lah, when bad inflation data means no increased interest rates, no increased interest rate from the US, then US dollar might drop. So if the data provides some negative reading but we are not sure yet, but it's better for you to wait after the data release. If really negative, then you need to bear in mind on this 1940, a crucial resistance level. When it's break out, then we might consider another resistance that we need to focus around 1970. But now, right, according to the technical front, I don't think it will be easier for gold to break above. So maybe this region should be considered more. 1940 and then 1910. According to technical analysis. Yeah, so it's very difficult for us to predict now. So if you insist on to trade, maybe you can consider now. It might be depreciate a bit until 1910, but you must set a stop loss above 1940 around here, because when it's break above, then your risk should be very high. So this is a thing that you need to bear in mind. So as a new trader, better don't trade during or after the CPI data, but you can just look for fun first experience with all the traders around the world. I see some experienced traders are quite excited to the CPI, and they know they are difficult and impossible to predict it. So what as an experienced trader do is trying to just to forecast whether it will break out the resistance or break out the support level. This is what we need to focus on. But really, when the CPI data release, the movement should be huge, unless the CPI almost same, no difference at all. But you can notice that currently market movement are very. So let's look at the 5-minute charts. You can notice that recently 5-minute charts are like no movement at all. You can also notice global investors are actually just trying to waiting for the news. There are no insider trading for the gold. Nobody knows what happens during the CPI data. The global investors are waiting for that. So there are no movement. So we wait for another 3 minutes. Excited to it. Nice, got so many traders accompanying me to trade with focus on the CPI data news, and it's quite good for our today analysis also, because we can try to link, especially for new trader, right? You can understand why everyone talk about the CPI data. Now you already understand, when CPI data high, then what happens to the currency, what happens to the interest rate decision. So you guys understand it. So and then you can just have a live experience towards the movement to see whether the data good. How about the gold movement or the dollar movement? Okay. Once again, thank you so much for all your supports. So we wait for another 2 minutes, and then kindly reminder, you can notice maybe we look at the H4 chart clearer. So 1940 crucial resistance. We don't know whether it can break above or not. So I think a lot of people quite nervous to you. So right. So 1940. Okay. 1 more minute, I think. 1 more minute. Good luck if the trader who wants to trade during CPI, but really for the new trader, don't do it. Not recommended. So let's wait together. But some risk disclaimer also. Sometimes after the CPI data release, there will be no movement. There will be chance like this also. I experienced this kind of things also. So yeah, you cannot 100% guarantee there will be a big movement, but sometimes they will. So look to it. So another 30 seconds. Okay, 1 minute. Good luck, everyone. One more minute or how? Okay, I think the data is going to release now. Let's look at the gold movement first. You can notice that. Let's look at the CPI data. Okay, we can notice the CPI data is actually much worse than the market expectations, like 3%. And then this is the time when gold go up like more than 1,000 of pips. because you can notice that this is one of the proof when the CPI data are very bad, low inflation, US central bank might not going to increase interest rate. Then we look at the dollar charts. Dollar moving down aggressively. Okay, dollar is going to move down aggressively, and then this is the time, and if we are going to look at the dollar gold, it's increased like more than maybe 80 pips. So you can notice that once again we prove that currently US economy are not good as our expectations. It's very bad as our expectations. So investors start to sell off the dollar because they think that the Fed is not going to increase the rate. And then let's look at whether it will successfully break above the 1940. I don't recommend you like you think this already successfully break and you buy now. No, it's better for you to wait until the candlestick close. Sometimes it might form a shadow also. So for new trader, you need to extra be careful towards it. But the first reactions towards it already show up. Increase more than hundreds. So whether it will successfully break above 1940, you need to bear in mind to the candlestick also. Sometimes it will suddenly form a shadow. But yeah, good luck for all the traders also. And then highly focus on 1940, the resistance level, to see whether it will successfully break above or not. Okay, so you guys for new trader already start to experience a good experiencing of the data now. So we are going to move back towards our topic. Maybe we can analyze some dollar trend first, because you know the data is going to put some negative reading, and the CPI data negative. All of the CPI data are very negative, 3%. And then you can look back the dollar trend, dollar drop. Okay, so but overall trend, whether the dollar is going to rebound, this is the dollar, yeah, it's not the gold trend. You can notice it. Whether the dollar is going to rebound or not, continue to drop or not, it will be highly depends on this support level 100.80. Why does we say so? Because if you look at the previous trend, you can notice that currently you are testing a very strong support level. Let's move. You can notice that around this support region 100.80 are very strong. So if you want to predict whether the dollar is going to break more or not, you need to focus on this candlestick. Once dollar successfully break below 100.80, they might increase the chance for it to continue extend its losses. So dollar trend, 100% focus on this crucial support level first. But yeah, there will be a high risk. There will be also the chance for this candlestick to suddenly form a shadow. So this is a risk that experienced trader need to handle. But if the forecast that if you are forecast correct, then your profit should be very good also. So this is also a good experience between the experienced trader, between the new trader, or maybe the mid experienced trader. This is a good experience for everyone. So this is the proof. And this is also one of the proof that fundamental analysis are very important for everyone to look at, because we need to understand what happens in the market. Like just now that trend, right? If we are going to use only the analysis technical, impossible for us to explain why does the gold price go up. Cannot, impossible. So we need some fundamental analysis to understand the trend also. Okay. All right. So we continue. So for everyone, I think you guys have a good understanding about the interest rate and then the exchange rate movement already, and then the inflation rate already. So we move back the questions now. Inflation is going high, and we say the bank is going to increase the interest rate linked to higher currency appreciation, right? This is what we mentioned, but we didn't talk about why they want to increase the interest rate. They didn't talk about it. So why inflation high, the central bank is going to increase the rate? Why? Because when the inflation are very high, it will actually cause the price going. It means that the goods and services, the price going up. So you need to stop the price from moving up. What you need to do? Two things. You need to increase the borrowing cost and then the deposit rate. Okay, you need to stop the price to continue extend its gains. You need to stop it. So of course, how can you stop it? You need to stop the spending from the investor, from the consumer. So how can you stop it? One step, you just increase the interest rate. So why increase the interest rate will stop spending? Two things is because when you increase the interest rate, then when you increase the interest rate, the borrowing cost is going to increase. Okay, when the borrowing cost increase, nobody is going to borrow from bank and buy anything anymore. Like for example, if you want to buy car now, previously 1% interest, of course you are going to buy a good car. But for now, if the interest rate is 20%, you are not going to borrow the money already, right? So this is the thing that you need to understand. So this is what the central bank do. When the inflation are very high, they don't want people to spend more, they just increase the interest rate. So when they increase the interest rates, nobody is going to borrow money from bank to purchase car, to purchase house. And this is the time that inflation will slowly moving down. But as a forex trader, interest rate, this thing is what we need to 100% focus on. It's not only the economics data. Data we already experienced, right? In future, what do we need to experience except from data? Data is one of the things. The second thing that we need to experience is, which is also very, very important for everyone to understand, is regarding the Federal Reserve. Whether the Federal Reserve is going to increase the interest rate or not. They sometimes will come out and provide some statement one. They say, currently I think the inflation in US is very high. I will increase the rate, or they might say the interest rate is the inflation is very low. They will not increase the rate. The statement from the Federal Reserve are also very, very important. To explain a statement, you can look at the goal. So nice. Congrats to those traders, but risk management, kindly remind the risk management. And then we are going to explain a bit about the dollar trend. Dollar trend, right? You can look at the movement. The movement is very, very bearish. It's not only data negative that support the dollar to continue dropping. It's not just the data. Okay. Sometimes the Federal Reserve member will also provide some statement also. You can notice that recently, right? The Federal Reserve member is actually keep going up and saying that they are going to not increase the interest rate anymore. Maybe this year should be their last time to increase the interest rate. Next year, they will stop the tightening policy. They might not increase the rate anymore. This is from policy maker statement. So this is the second thing that caused the dollar to drop. Okay, so statements are also very, very important. You know already data important, but after the data release, the bank will come out and say something. So after the webinar tonight, right, maybe you can look more on news, then you're able to understand. Sometimes the news is just going to saying that the Fed is going to increase the rate. That's why dollar go up. Then you're able to understand why they want to increase the rate, and then what is the impact from increasing the interest rate towards the currency. Okay, so same thing, you can refer more to news. I think now market will actually hovering between this kind of news, interest rate things, inflation things. What does the Federal Reserve member say? So this is a thing you need to be careful on also. Okay, so I think we already talked about a few most important fundamental things that we are going to discuss for all the traders already. So yeah. Now we can try to combine the fundamental analysis as well as the technical analysis together. Since we already mentioned a lot of things about economics data, Federal Reserve, then is it mean that after the data release is good, or after the Federal Reserve provides some positive statement or negative statement, we need to do trade straightly? No or yes? Actually, no. After we understand all the fundamental news, right, we need to understand what is the best entry point for us to do. Like for example, for gold, I cannot just say you just buy gold until tomorrow. No, you need to, according to analysis technical, to trying to forecast after it break what resistance level the gold price might reach until where. This is how we combine fundamental analysis and technical analysis together. It doesn't mean you just look at the economics data. Oh, CPI is very bad, so I just buy gold like until tomorrow. No, you can just combine analysis technical and then fundamental together. If the data is very, very bad, then I should consider to buy gold. And when should I consider to buy gold? Then you look at the resistance level 1940. If the candlestick successfully break above, then it should be continue to increase more. And then you combine with more resistance, maybe short term it might reach until 1970. But there are risks also, because you can notice that there are a lot of few small resistance level around this region. So whether is it worth it for you to continue buy, because if you buy, you already gain, but if you buy now again, your stop loss level should be huge, maybe 100 pips. Is it worth it for you to take the order again after you digesting all the fundamental news? This is how we combine fundamental to technical analysis. Okay, we understand a good entry point and then good stop loss point for investor. So it helps. Technical analysis will also cover it more in future. So far, we will only cover on the fundamental. Just give you guys an idea on how can we combine analysis technical as well as the fundamental analysis together. For all the new trader also, good experience, because we all together experience the CPI. More than 100 pips going up for the gold market. It's quite ridiculous, right? Okay, so I think, yeah, that's it for the webinar contents tonight. I hope you guys really enjoy it. Now